Hey you guys, my name is Jeff. Welcome to the channel. Today I want to talk with you about international ETF investing. I imagine that a lot of you guys are trying to build your wealth so that you have more in 10 years and in 20 years and beyond. And so I just want to provide you with some ideas and some data, real information that I think will be useful to you as you go about your investing, especially if you're considering investing in ETFs. So the thing that I want to start with here is this idea that it's good to invest internationally, to invest in companies in emerging markets or developed markets. If you just want to invest in stocks of companies in the US, you can invest in the Vanguard 500 index, and that is VOO, that's the ETF. You can invest in VTI, which is the Vanguard Total Stock Market Index. And there are many, many, many other ETFs that invest within the United States in stocks across the US. But, a lot of times we hear when we read articles or we listen to, videos or people talking in the financial media about the importance of international diversification. 1, 2, 3. 3 of these I actually invest in myself. I should tell you that right up front. Berkshire Hathaway is a stock that I've invested in for many years. The Vanguard 500 index, I happen to own shares of both the mutual fund, the index fund, which I started a long time ago. The Vanguard Total Stock Market, I invest in VTI, which is the ETF. The Vanguard Total International, I do not own shares of that ETF. That would be VXUS. I do own some mutual funds that invest internationally, and what I'm sharing with you is reflecting back on the last several years of investing internationally. And the bottom line is those stocks have not done very well. And if I had, compared to stocks in the US, of course, if you knew what was going to happen in the future, you'd never do it if it were a bad result. But when I started investing in international stuff a long time ago, I had no idea what the returns would be like. So let me just show you what we have here is 20 years of stock returns. And this is if you started with $10,000 back in 2002 and you invested that money for 20 years until this year. I'm going to show you what your investments would be worth. Okay, if you invested in Berkshire Hathaway, many of you guys probably know this is a stock. It's a company that owns a lot of other companies, about 70 to 80 different subsidiaries, and then owns stock in a whole bunch of different companies. Apple is their largest stock holding position in Berkshire. So if you'd invested $10,000 in 2002, then your total amount of money that you would have as of September 2022 in Berkshire Hathaway would be $55,604, and that would wind up being a return of 8.66%. Okay, so that's our first data point. Okay, an 8.6% return, 55,000. Now, if you'd invested in the Vanguard 500 index, you would have gotten a result that was almost that good. It was a little bit less. It was 50,460. And that total return as a percentage is 8.15. So you can see that just a 0.5% return over 20 years can turn out to be about $5,000. That's why costs matter, by the way. If you're spending a 0.5% or 1% in management of a mutual fund or an ETF, that can wind up turning into a lot of money that's going to the manager's pocket and not into yours. Now let's look at the Vanguard Total Stock Market. I'm going to make this one blue to keep consistent here. Vanguard Total Stock Market, you would have $54,569. And the total return on that would be 8.56%. So that's just a touch less than the Berkshire Hathaway return, and it's actually considerably more than the Vanguard 500 index. And that's the difference between these two is the total stock market invests in small cap and mid cap stocks, but the Vanguard 500 only invests in large cap. So this would be one of the benefits of owning a total stock market index fund like VTIAX or the total stock market ETF like VTI. Because of these small and mid caps, you can see there's an increase in the total return as a percent and also the dollar amount. Now let's look at the Vanguard Total International Index Fund, okay? This fund over the last 20 years has returned a total amount in dollars of $29,902, and as a percent that works out to 5.44%. So what you can see there is investing internationally, and this is of companies of all sizes located in countries all over the world, has gotten you a return that's a lot lower than sticking with either a company or an index fund that is located in the United States. There are currency risks, there are political risks in other countries. When you're talking about investing in a country like Russia or Brazil or India or China, there are a lot of risks. I just point this out to you. For full disclosure, I do own shares, like I mentioned, of some not only international mutual funds, but I own some shares in an emerging markets mutual fund. I invested in that fund more than 10 years ago. It's one of those things where I have always hoped or thought that these companies in the fund would eventually grow at a faster rate than those in the US. The net result is that those index funds have grown at a much slower rate. You can only start where you are today. You can't go back and change things in the past. Even though I understand a lot of international mutual funds and ETFs like VEA and VXUS, personally, I'm not investing more money internationally. I just believe, based on my own experience as an investor and on this data, that 20 years, and that 20 years to me is a long time. That is a very patient investor who sat around and waited for things to turn around with their international stocks. The evidence shows me that you could have a lot less risk and also have much better returns by sticking to investments in stocks and ETFs that are based in the US. So that's what I wanted to share with you. I hope this has been useful. So if you've liked this and it's been helpful, please give it a thumbs up. It really helps the videos and helps the algorithm to spread this word out to other people. And if you haven't yet subscribed, please subscribe, and then you'll get a heads up whenever I make new videos. I'm real glad you stopped by, and I will see you in the next video.